Good afternoon, everybody. Well, I have to admit, thanks for the many years without saying how many, and I have to admit I would have never dreamt that many years ago to find myself in the very same room where I had my graduation, actually addressing a top-notch level of university professor. So please don't give me a score at the end. I just start dwelling upon the words Massimo and Gidi used. We need to look into the future, and the future is going to be very different as far as finance is concerned compared to what I myself experienced and to what each of us is seeing these days. Career development in finance. So let me start by saying when I did start, finance was pretty much something in itself. It was a secluded cluster of activities. Everybody knows what to do. Everybody more or less was in a position to see what kind of trajectory the company would have taken in the foreseeable future. You as a professional would have taken in a foreseeable future. And therefore, it was pretty much a predictable playing field where each of the players knew what to do, knew what to expect, and knew how to behave. Now, very recently, if we can put the bar, 2007, 2008, the Lehman case, which actually triggered a number of chain reactions, which then led us all to what we see today. In the last 10 years, what has really changed, in my humble opinion, is the fact that the world of finance is now crossed by a number of different things. Its shores are watered by waves of whatever nature, and therefore it's going to be much, much more difficult for those who are in any kind of positions or in wearing whatever kind of hat, much more difficult to steer the wheel. Let me give you, when we're talking about finance, we're talking about numbers. So let me give you 2 or 3 post-its so that you can gauge and weigh what we are talking about. Aging of world population. Is it going to have an impact on finance? Yes, it will, for sure. By 2050, for the first time, the so-called silver age, so those over 65, will outnumber the millennials, so those below 14 years old age. So in a matter of few years from now. And again, just to give you an idea, at that time, the population in Japan will have its 37% older than 65. Key countries in Europe like Germany, Italy, and Spain, 33, 35. It means a lot in terms of quote-unquote finance. Asia dominance in the overall worldwide population. Today we are talking about 7.2 billion people, 3.7 billion of which live in Asia, Great Asia. That means an area with lower consumption, lower spending habits for the time being. But that means that, 20 years from now, it will have an impact. And just to give you an idea, the total number of population in the USA, 326 million, will fit in 4 big areas in China. So 327 US people will sit in 4 provinces of China. Immigration afterwards. Today we have 1.1 billion people traveling in 2014 all over the world, crossing boundaries, more or less legally so far. What does it mean in terms of finance and the economy in 20 years, that percentage by 2025 will get 30% higher. Urbanization. In the next 10 years, the 600 largest cities in the world themselves will account for 65% of worldwide growth. Today, 40% less. And then the last point, in terms of geopolitics, and I wouldn't dare venturing into, what's happening these days in the Middle East, too complex. Honestly, I'm not thoroughly equipped to do it, but each of us can see what it means. Innovation, Internet today, 40% of worldwide people are users. 20 years ago, it was 1%. Is it going to change? Yes, it's going to change with everything attached to it. Today, the Internet industry is something which is worth 7 trillion. By 2025, it's going to be 40% more. Is it going to have an impact on finance? For sure. And last point I would like to make is, those working in the finance environment are, at the end of the day, at the front line of innovation. They are bound to do it, because otherwise we won't have a job. Those teaching finance will not keep their job if they do not innovate. Those working as professionals in finance will not keep a job if they don't innovate. But at the end of the day, everybody has a tendency, or this is at least my experience after many, many years, to, beware of venturing into new territory, making sure that everything is still under control. Today, the United States accounts for 23% of world GDP. Europe is close to 16%. And just again, to give you an idea, California has the same GDP of Brazil. Texas, the same GDP of Canada. New York, the same GDP of Spain. By 2050, it's going to be radically different for the very few reasons we just outlined. This is to say that if we project the world of finance forward, those of you who are, trespassing the door today of scholars, pupils, university, you receive lectures, courses, you're now entering the age where you become grown up, older, you want to work in finance, I assume. You're going to find a totally different platform, which is going to be a very challenging platform, but this is a platform which will have key features which are upside down compared to where they were a few years ago. And 2 or 3 examples of what your challenge going forward is going to be. Number one, we still have lots of dislocation around the world in the markets, in the way those who are governing countries are managing financial and economic problems. I mean, those of you who live in Europe, you read on the paper every single day the discussion and the debate about fiscal impact, deficit over GDP, total debt over GDP. You have countries which are growing at 2%. You have countries which are not growing. You have deficit at 4%, so well in excess of the threshold of 3%. Others well below. And that factored in an overall discrepancies of performance. So China is slowing down? Yes, definitely. China is slowing down. But for the next 3 years, it will grow at a multiple of what Europe will reach to. 6 point something versus an average of possibly 2%. So dislocation, different teams, different performances. That means potential instability. Point number two, this dislocation will have an immediate impact on market performance. So all those who are involved in the finance environment will have a market reference, no matter whether you will be trading bonds, equity, plain vanilla instruments, derivatives, whatever, your reference will be markets. And markets means investors' behavior, as we all know. So how will you face off the potential threats that the market will put on the table every single morning at 8 o'clock, no matter which part of the world you will be sitting in? Then we're going to have a third very relevant point, which is an increase of the burden of regulations. 10 years ago, the regulatory requirements were not one of the top 10 points in the agenda. Today, they are point number 1, point number 2, or point number 3. That means behavior again, means a lot of investment, because every single company working in the financial environment will have to invest an awful lot of money to make sure they comply with, to make sure their employees comply with, and it's new territory, pretty much unexplored, also because the regulators themselves doesn't have a real clue today of what to do in front of what's happening in the markets. Last point, up until 2007, it was more an exercise of short-term performance. Today, we are shifting towards medium, long-term. The management of the financial institutions is more gauged, assessed, and evaluated on the basis of medium, long-term performance. Investors' behavior is readdressing towards medium to long-term, and that has very positive implications on the one hand, different implication on the other hand. And again, we all need to readjust. So those of you who are starting now, I think, have a great track record to look at, because the last 10 years gave us a lot to think about. I want to end with a few suggestions, which is what I usually try to do when I lecture students and when people ask me, what do we need to do in order to increase our chances of being successful in the finance environment? I want to work with a bank, with an insurance, with a financial institutions. Well, I think, that would probably deserve itself a 3-hour lessons, and with all of the Lewis contingent here, we are always discussing which is the most appropriate way to convey this kind of message. I would leave you with 3-4 words. Finance means intensity. No matter what you will be doing, no matter whether you're going to do it in Rome, in Milan, in New York, in Singapore, no matter whether you will be working in the finance department of a big corporations, with an investment banks, an asset manager, intensity is what is required. And intensity means not only physical intensity, and therefore is not only a question of long hours, but it's brain intensity. So keep up to speed to what's happening. Try to carve out part of your daily routine to continue studying and analyzing and do some vertical drilling on the key topics. Word number 2 is behavior. The more you will be progressing in your own career, the more you're going to be evaluated by your peers, your superior, your clients, the regulators, according to your behavior. It is not straight and plain. Each of us has a different behavior. But at the end of the day, those who are successful and those who I have seen being successful in the business are those who consistently behaved with certain standards. And that doesn't mean you need to wear a white shirt or a blue shirt. You need to behave properly, according to the rules. And behave also means from time to time, raise your hands. If you disagree, say it loudly. Because at the end of the day, always being polite, this is what will save you when stormy weather comes over. Abnegation, altruism. Unless you work on your own, sitting in your own dining room or living room, you're going to work with lots of different peoples. Different behavior, possibly different intensity, but think about others before you think about yourself. Your career will not be a function of what you will be doing on your own, but it will be a function of what you do along with others. And then the last word is judgment. When I was a student, when I started, fortunately enough, none of these guys knew me at that time because I was not really behaving appropriately. The more you move on, the more you understand that what counts is, yes, quantitative skills. Yes, today is very relevant what's your GMAT score or your graduation score. Fair enough. The more you move on, the more the relevant thing becomes judgment. You will be asked to opine on a number of things. People will seek your advice. People will come to you to say, are we going route A or are we going route B? So, pause down, pull over for a while, think about it, because it is what is going to build your own CV. Up until now, your CV is your university track record. The day you start, your CV is going to be the way your judgment is going to be weighed and gauged by others, internally and externally. And then the last words of wisdom. Actually, when Giorgio invited me to talk today and to address you all, I actually thought initially, well, that means I became a wise man. So, great. But then immediately afterwards, I then thought that means I'm becoming older, which is not good. So last words of wisdom, have fun. The day you realize that what you are doing does not put you in bed with a sort of intellectual smile, well, it's probably time to do something different. Thank you very much.